Good morning, everybody. How are we today, David? You okay?
Very well indeed, thank you. How are you?
I'm very good indeed. Very good indeed. We're going to make a promise to each other throughout today's webinar not to talk about the football last night. Do
100%,
we both agree?
100%. You've just done
Fine.
it. Move
Let's
on, move
move
on.
on. Good morning, everybody. Thank you all for joining us today. It's Thursday morning at 10 a.m. So I do need to remind myself that it's not the usual regular Friday 10 a.m. slot. So if at the end of the webinar, I wish you all a wonderful weekend, just remember to return to work tomorrow because we do have another day before the weekend. As always, we intend for the session to run for the full hour. So please do ask any questions throughout today's session. David is our host today from FE Fund Info. At the end of the session, there will be a feedback form that pops up. We are keen advocates of feedback, so please do let us know your thoughts on today's session, the speaker, and there's a few different ways that you can get involved with FE Fund Info and the Financial Planning Club on the feedback form as well. And if you do require CPD from today's session, again, on the feedback form, hit yes, and we'll get a CPD certificate over to you by the end of the week. So with that being said, guys, let's kick things off today. Just want to give you a little bit of an introduction as to the Financial Planning Club, who we are and our background. Co-founders Amanda, Lewis, and myself. Amanda's background is running a large network on both employed and self-employed advisors. Myself and Lewis, we have run a financial planning recruitment business now for over 10 years. So really supporting firms with growth, cultural alignment, and just really about streamlining people's businesses. It's at the heart of what we do in both the recruitment and the financial planning club. It's all about operations, growth, streamlining, automation, and AI, and everything in between. My LinkedIn QR code is on the screen as well. So from today's session, we will create little video snippets just to repurpose some of the content and information that you've seen today. We will create an article off the back of today's session, along with all of the other sessions. And I was looking over them last night. We've got 51 hours of content from all of our amazing collaborators that now partner with the Financial Planning Club. So just a massive shout out to every single one of these firms that are really driving and innovating the industry that we work in today. We couldn't do what we do without the wonderful support of every single one of these firms. So just again, a big thank you and thank you for partnering with the Financial Planning Club. Great content delivered by some awesome businesses and some great people. The button has stopped working, but here we go again. Outside of the membership consultancy piece at the Financial Planning Club, we are on a mission to create a community that works for absolutely everybody. We know people need to talk, and we know people need support. We have individual WhatsApp communities depending on the role that you play within your business. So whether you're a mortgage advisor, as I know a lot of people on today's webinar are, whether you're a business owner, a financial advisor, or a power planner, or an ops manager, we have individual WhatsApp communities dependent on the role that you play. As it's topical, the mortgage advisor one, it's going off all day, every day. So if you do join that group at the end of today's session, I do recommend that you mute it. But it's a place where you've got a particular client, a tricky case, you want to know what lender to go with, just views and thoughts of other brokers that have been there, done it, and placed similar business. It's a great place. It saves advisors hours on the phone to the BDs and finding out, criteria and stuff. Other advisors have already done the hard work for you. So do let us know in the feedback form if you'd like to be a part of any of our communities. Club Live is our webinars, expert-led, practical, and CPD accredited. The Financial Planning Podcast is where you can hear the stories of owner-managers of growing financial planning firms. You can hear the highs, the lows, the good, the bads, the uglies, and everything in between. And we always say, if you've got a story that you want to tell, come onto the podcast. You can listen to it all on all of your platforms, your Spotifys, your Amazons, and wherever else you can get hold of a podcast these days. So that's the community piece. Just touching on what we're up to over the next few weeks. On the 24th of July, we're joined by Bearrock for Consumer Duty. So really about aligning client satisfaction surveys, looking at how firms can evidence good client outcomes more effectively. We're then taking a short summer break, thankfully, before returning on the 16th of September with Corbell Partners. So we're looking at supporting employed financial advisors take that leap to self-employed. So it's about doing the leap properly, things that you do need to consider. Then on the 25th of September, Tatton Investment Management will be joining us for Beyond the Black Box. So a look into alternatives in MPS, exploring exploring the role alternatives can play in portfolio. So as always, our webinars are CPD accredited, and we'd love to see you on more of our sessions in the very near future. And thank you to the club for giving me August off. Really appreciate that, because normally every Friday I'm behind a screen doing webinars. So joining me today is David, Director of Wealth Sales at FE Fund Info. David has over 17 years experience supporting advice firms, and you've worked with more than 5,000 businesses, helping advisors use technology to improve client outcomes, streamline processes, and deliver more effective advice. I hope that's your bio. I hope I've not introduced somebody completely different.
That sounds about right.
That sounds about right. Good. We're on point today. Before we get started, we always like to take a quick look. We ask you guys and girls and attendees some questions when you register with us. So we're going to have a quick look at the responses of that. So we've got a really good mix in the audience of mortgage advisors. We've got some holistic advisors in the room as well, and planners across the UK. Most attendees aren't currently using cash flow planning within their mortgage process, but they're keen to understand how it can add value. And that is the backbone of today's session, which I'm really excited for. The biggest challenge is helping clients really recognize the value of protection. So today's session is all about making those conversations more engaging and more impactful. David, I suppose what I'll say to you, right, you've supported over 5,000 firms. Is it uncommon for mortgage advisors to not implement cash flow modeling into their advice process to support clients beyond the transactional fee of a mortgage or protection?
Yeah, 100%. I think when we look out across the advisor industry, you've got like 20,000 financial advisors over here, and they have all pretty much adopted cash flow planning over the last decade or so. And yeah, when we look out across the mortgage and protection space, I appreciate there's a bit of an overlap here. So there's plenty of advisors that sit in the middle of that do both, that clearly will be using cash flow. But when we look at the mortgage and protection space, there's very, very few advisors over there using the cash flow tools. And it's always been a bit of an enigma to us, because cash flow should be used for both. It's a tool that can be used by any advisor in any industry to paint a picture to a client of why they're introducing a particular product, whatever that product is.
Yeah, 100%, mate. And even if I put the recruitment cap on quickly over the last 10 years of supporting networks with recruiting mortgage advisors or, DA firms or whatever it may be, it's never been in the job description. It's never been in the fact find when we speak to advisors about cash flow modeling for their clients. So it'd be quite nice to see if we can revolutionize what they're doing. And I think we speak a lot about moving advisors or mortgage brokers in particular from being a little bit more transactional to building this recurring revenue machine that they've got access to, which is going to be good. It's going to be really, really good.
Absolutely. I mean, it's a theme we hear quite a lot when we do talk to mortgage and protection advisors. We're talking to some big networks at the moment, and they're singing from the same hymn sheet. They want the industry to move in that direction of a more kind of recurring basis. And I think in fairness, I would suggest, dare I say, that it's probably partly on us of why mortgage and protection advisors haven't necessarily adopted cash flow. I mean, I think there are plenty of cash flow tools out there. We're just one of many. And I think all of us very much blindly just focus on the financial advisors and don't really do much by way of this sort of stuff, webinars and communications, and tailoring our products to that side of the market. But that's very much an ambition of ours at the moment, to try and do just that, to try and introduce this really useful technology to the different side of our industry.
This is it. Let's try and educate some people as to how they can start bringing it into their workflows and into their advice process, right? Because some people might know about it, know the purpose of it, but don't quite understand how they can implement it into their clients. So let's do just that. I will stop sharing my screen now. There we go. I've hit the right button.
Super. Hopefully I hit the right one as well. Hang on.
There we go.
Right, hopefully.
Yep.
You see that? Is that coming through?
Yep, we've got your screen, mate. That's it.
Yeah, wonderful. I'll just move that to one side. Yes, morning, everyone. It's a bit of a mouthful. Webinar topic: beyond the mortgage, vulnerability protection, and the visual client journey, the visual approach that's changing mortgage protection advice for good. What does that mean? We'll talk, as Lee just said, we'll be talking primarily about these new bits of technology that are available, newish tools that are available to mortgage and protection advisors, namely cash flow planning, but also note-taking tools as well, that taken together collectively can obviously drive efficiency in your businesses. It will keep you hopefully on the right side of the regulations. We'll be talking quite a bit about kind of consumer duty and vulnerability as well, and how these technologies can play a part. But as we've already said as well, kind of helps that transition, moving from this focus and mindset of transactional one and done, which is what the mortgage and protection industry has always been like, to more of like a recurring service-led proposition. So who are we? How do we know about this stuff? Obviously, you've introduced me, Lee, in terms of FE Fund Info. FE Fund Info are a data house and we're a tech house. So the data side of our business aggregates as much data as we can get our hands on: valuation data, client data, investment data, and that gets validated in our database. And then it surfaces into the software tools that we're building, namely the cash flow tools like CashCalc, and got a new AI tool as well, and analytics. There's lots of software tools, but that's ultimately what FE Fund Info is and does. Now, in terms of an agenda, what are we going to cover off? We cover off 5 core things here. We're going to talk about cash flow planning in general, because again, appreciate a lot of people watching this are not going to be from the financial advisor side, so they're not going to be as aware and probably not using financial planning tools like cash flow tools. So we'll talk about cash flow, where it's come from, what it is, what it does, why it's so popular. Then we're going to focus a bit of attention on consumer duty, those 2 big bits of regulation that have come in over the last couple of years. How is that changing the industry, and how will that potentially pivot the industry to bring them more in line with using these types of tools like cash flow and note taker tools? We'll talk about AI note taking in general. I said that before that, you got all these financial advisors over here using cash flow planning. You've got all these advisors over here in the mortgage and protection space not using cash flow tools. But I'd say that pretty much every conversation we have, whether it's from this side of the industry or this side of the industry, very few still seem to be using note-taking tools, which isn't a massive surprise because it's quite a nascent industry. It's only been around for probably about a year now. We're gradually getting more and more people. I think I've noticed actually on this meeting, you're using them, Lee, and obviously we have our own as well. We use it a lot. So we're talking about note-taking tools and why that's, again, a happy friend when we're talking about vulnerability assessment and consumer duty. And then we'll finish off as well. I kind of touched on this already. The idea that maybe it is a bit on us. We're the incumbent cash flow tool. So when I'm starting to say that it's a bit of an enigma that mortgage and protection advisors aren't using cash flow tools, well, perhaps that's our fault. Perhaps we're not doing enough work and effort in promoting our tools to that side of the industry. So what have we done over the last, let's say, year to kind of adjust our tooling to make it a little bit more mortgage and protection friendly? So we'll cover that off at the end as well. And there's a couple of polls as well that we want to get people to interact with, to get us a bit of an understanding as to how your processes are changing with these regulations, and equally, are you using cash flow planning? So we'll take a bit of a break for those and get people's insights. Cool. In terms of cash flow, let's dive straight into it. What is cash flow? How does it work? Where it's come from? Cash flow's been around probably for about 20 years now, just under 20 years. Voyant was pretty much the first mover in this space. They're still around. There's probably about 10 cash flow tools in the UK, 10 kind of predominant cash flow tools in the UK. And they all do the same sort of thing. They're all, again, aggregating lots of data, lots of your client data, all their incomes and their expenses and all their different savings pots. And it paints a picture into the future of what that financial, or what the financial position of the client will look like over the next 5, 10, 15, 20 years. And this is kind of like a traditional cash flow image. So I've got a little bit of an example here. Keith and Barbara, husband and wife team, both 62 at the moment. And the cash flow usually tells us what their assets are worth today, about 935,000. If you stack them on top of each other, their big pensions and their ISAs and their cash accounts. And obviously over the years, as they continue to work, those pots are just gradually going to increase. Obviously pension contributions going into pensions and just naturally saving money. And then once they retire, That pot's probably going to be around about £1 million, just over. And then obviously the income's turned off, the salaries stop, and they start having to eat into those assets. So if they were to reach the ripe old age of 100, very unlikely. I think each of them have probably got about a 1 in 10 chance. So taken together, that's a lot less. But if they were to reach the ripe old age of 100, the cash flow can tell us on current projection, there's going to be a bit of a black hole there, about 25,000, which may not be too much of an issue. We can talk about equity release. We can talk about maybe making some saving now, or not buying the Bentley on retirement, Keith. Maybe that might help. So that's what a cash flow allows us to do. To simply take the client's current position. I'm not really doing much here as an advisor. I'm just simply absorbing all of that data, and the cash flow does the heavy lifting and produce that nice visualization. Now, there are different angles in which you can look at a cash flow. All the cash flow tools allow you to look at savings over time, which is this, but they also allow you to do money in, money out. So if I dive into that chart and look under the skin, I'm looking at this, all the money flowing into the cash flow, all the money coming out the other end. And unsurprisingly, again, taken year on year, you've got all the income coming in as blocks. So you've got Keith's salary and Barbara's salary, and maybe some rental income or other income streams coming in as well. And collectively, every single year, that's about 90K. So that's well above their expense line. And they've actually got two expense lines. They've got an essential expenses. That's just living. That's, if I'm looking at what I need just to simply live a mildly comfortable life, I need my food paid for, heating, electricity, council tax, nothing particularly exciting. That's my baseline living. But then what about the stuff on top? What about, your Sky Sports subscriptions? What about your cars, your holidays, your socializing, etc.? That's the dark black line. And again, that ebbs and flows, because obviously after retirement, someone might want to go on a round the world cruise. So obviously it's going to spike a bit. So it's just, again, a really lovely visualization to be able to show a client that this is all your income coming in. This is obviously how we're going to meet the deficit. Clearly, we're going to be using pensions and ISAs and cash accounts to account for all these expenses. And if we scroll right the way down to the end, unsurprisingly, we see a bit of a gap here, because you've essentially run out of money. You've still got the expense, but you've run out of money, and that's what's causing the 25K black hole at the very end. And just lastly, on the cash flow kind of angle, you can look at it from a slightly different angle, which is just the taxes. And again, I'm not having to do anything particularly clever here. I'm just simply telling the system, Keith's on 70 grand a year, Barbara's on 40. They're also taking money from X, Y, and Z sources. So the system automatically has all of that computed. Again, just general cash flow tools will do this. And it will then allow you to illustrate the taxes over time. You look, Keith, there's your income tax, there's your NI, there's your slither of CGT, there's Barbara's income tax, and there's Barbara NI. And then clearly when you both finish work, you're not going to be paying as much taxes. That's why it kind of craters. So on its own, without doing any tinkering around the edges and messing around with it, it's just a really lovely visual for a client and an advisor to get together on a regular basis to kind of talk about their financial future. Now, why is cash flow so popular? Well, I said it was kind of born 20 years ago with Voyant, but I mean, you could arguably it was actually born out of RDR. I mean, it's technically started about 20 years ago, but what poured fuel on that small fire was RDR, Retail Distribution Review, in 2012. And I was in the industry pre-2012 and post-2012, so I saw how that financial services industry massively pivoted and changed based on a set of regulations, and how they started adopting newer technology because of that regulation. And the new technology all of them started to adopt was cash flow, and that trend has continued. And the reason for that is because RDR has changed the financial advisor industry from a commission-based model, quite transactional, to a yearly recurring, where you're having to provide a service and having to justify the value that you're offering that client. And therefore, one of the ways of doing that, one of the easiest ways of doing that, is actually, let's sit down every year, Mr. and Mrs. Client, pull up your cash flow. Things are going to change, because this is what it looks like today. But next year it could be a little different, because suddenly your son's decided to get married, so 30K is going to be whacked out of here because you're paying for it. Or you've decided to retire a little earlier. Okay, let's just check that to see what that looks like. But more importantly, it allows me to compare before and after. Okay, well, this looks great. But what about if what about if you retired early? Or what about if one of you died early? What about if one of you died early and then suddenly there isn't a protection in place? That's not going to make this look as rosy. What does this look like if you did have protection in place? Or what does this look like if you had more protection in place? What does this look like if the sudden mortgage rates suddenly spike? I see you've got a big mortgage here, Mr. and Mrs. Client. Can you can you suffer a 3% increase in your mortgage rate? Well, I can show you exactly what that looks like, and we can spot these potential bumps in the road, and we can put them side by side and start telling that story. So it very much leads itself to this repeatable service for a financial advisor by allowing you to kind of paint this picture and tell a story to a client of this is what life looks like now. This is the bump in the road if it happens. This is the foreseeable harm I've spotted, and this is what we can do right now to make changes. And this is a good example, actually, because I mean, 25 grand sounds like a lot, but a cash flow is a beautiful way of showing just how minor little adjustments in those early years can compound over time. £25,000 sounds like a lot, but if you're making extra 0.5% contribution into your pension, an extra percent, maybe put an extra 200 quid a month into an ISA, that compounds every year. And actually that would mean that you could easily kind of wash away that 25k loss. So that's kind of cash flow, where it's come from. As I said, it's kind of born out of regulation, born out of RDR, and over the last decade or so, it's very much been a kind of core bit of a kind of a core solution that financial advisors have adopted as part of that regular recurring service. If we fast forward to today, we've got another set of regulations that have just landed on us. I know it's maybe 18 months, 2 years ago, but these are relatively new bits of regulation. Actually, consumer duty is almost related to RDR. It's almost the language of consumer duty is almost identical to retail distribution review all those years ago. But let's have a look at the regulations today. I love that saying, history doesn't always repeat itself, but it often rhymes. I can see this already happening with the regulation. If we look back at RDR and saw how RDR massively transformed an industry and made advisors start having to adopt different bits of technology, will we see the same with consumer duty and the offshoot of that, which is vulnerability assessment? I would believe we would. So I'm sure we've all sat through exhilarating consumer duty webinars. Don't worry, this isn't going to be one of those. We're not going to get into the weeds of what consumer duty is, but just to kind of zone in on a few bits here. Consumer duty, there's four core tenets of consumer duty. You've got consumer understanding. Does the consumer fully understand what you're offering them? Consumer support, supporting that client, not just from day one to transaction, but past transaction. You need to make sure that client is supported. And the big one as well, it's quite subjective, but price and value, making sure the value you're offering the client is equal to the price they're paying. Can you justify that? Can you kind of document that? As you can see, it's underpinned by one cross-cutting rule, which is avoid foreseeable harm. And again, looking out into the future, can I look at your position now and see in the future how your position is going to be changed by an increase in mortgage rates, by not having enough protection in place, by taking too much money from your pension? It could literally be anything. Is there anything I can see? And now the onus is on me, on the advisor, to spot this, which hasn't necessarily been in the past. I need to ensure this is all documented and I can see these issues in the future, and what am I doing now to mitigate that, or at least what am I doing for the client to understand that is a potential risk? And if they don't want to do anything about it, fine, but it needs to be documented and that I've spotted it and offered some sort of solution. And the big one as well, commission is not an excuse. One-off pay does not mean one-off duty. I'm not suggesting for 1 minute that consumer duty mandate mortgage and protection advisors to have a yearly service. But again, if you look at the language of the consumer duty, if you look at the wording they're using, it's fairly clear to me, and I think others, that they're very much trying to steer that industry, like RDR did with financial advisors, steer the industry from a less of a focus on transacting and one and done mentality to more of kind of that regular review service. And how can you do that? Automated maturity reminders, annual check-ins, that sort of stuff. And then another big one is making sure absolutely everything is documented. I think beforehand we've moved from a world where it was just literally, I've got a T's and C's, I'll get a client to sign that on day one, I'm good. That's not enough anymore. Absolutely everything is part of that process. When you're providing advice or any kind of solution to a client, has to be documented, from that first meeting to the review meeting, to the bit of advice you're enacting. And again, if this is what consumer duty is telling you, and we know of the software applications floating around available to you, that's why in our belief, that's why cash flow planning and AI note taker tools will again find a happy home in the mortgage and protection space, potentially, because again, consumer understanding, consumer support, justifying price and value, looking for foreseeable harm, all of this can be done by cash flow, trying to move more towards a mentality of looking after that client year on year. ensuring that as their life changes, so does your advice process. Again, that's cash flow, and everything being documented fully. You can't get much more documented than an AI note taker sitting on your shoulder in every single meeting, in a digital meeting, in a face-to-face meeting, transcribing and documenting every word you're saying and recording it historically. So all of that can be auditable later on by the FCA or compliance.
David, we've
so,
just
go on,
just to interrupt you, sorry, mate.
go for it.
We've had a hand raised, and at this point, they either panic and think, "Oh my gosh, I didn't, mean to raise my hand." But Joanna, for the sake of it, if you've got a question, please do let us know, and anybody else in attendance today, if you've got any questions at any point throughout, just let us know. You could do it in the chat function, or there's a Q&A section as well. So, Joanna, if you want to ask a question, you got two ways that you can do so. On the bottom of your screen, you'll see a chat function and a Q&A function as well. So just ask wherever you feel comfortable to ask questions. That'd be great.
Absolutely. Starting to heat up in this room. So if you can see beads of sweat forming on my head, it's not because I'm nervous. It's because it's an oven in this room. As the morning cools on, it gets hotter and hotter. Cool. Okay, I'll power on. Cool. So that's one bit of regulation, and feel free again, Lee, to cut across if we got any questions you feel it's wise for me to take a breath and answer. Then great, or we can leave them to the end. I'll leave that to your judgment. So yeah, that's consumer duty. That's obviously the big bit of regulation that's come in. Related to that, or pretty much as part of that, you've obviously got vulnerability assessment as well. I've set that up as a separate tab because it's obviously quite a large part of consumer duty. Vulnerability, again, there is an expectation for advisors to ensure that they are spotting and trying to find any vulnerabilities in clients. And again, not one and done. It has to be a regular review. And there are 4 core parts to this. You've got to look at a client's health or understand their health conditions, look at their life events. Again, that's looking out into the future, looking at their resilience and looking at capability. Understanding their understanding of this market. If you're clearly seems pretty commonsensical, but if I'm talking to a client that knows absolutely nothing about mortgage protection investments, clearly my advice process should differ and the language I'm using should differ compared to someone who knows this very well. But that needs to be documented, that needs to be audited, and that needs to be easy for you to prove that your process has changed in line with that. So that's kind of leading us on to the first poll. I think, Lee, you're going to take over, but it'll be absolutely fascinating for us to understand, because we don't get a opportunity to do this often, given that vulnerability assessment is so new in this industry, and given that this is what the regulator tends to do time and time again. They come up with these regulations, they throw it down on everyone, and they don't expect everyone to pivot on day one. It's going to be usually turns out to be quite a messy 1 or 2 years where everyone's frantically running around thinking, right, with these new regulations, how am I going to adjust to do this? So I certainly don't blame anyone if they come back and say, look, I haven't got a process of vulnerability. This isn't a sneaky way for us to figure out who's not got vulnerability and then we'll grass you up to the FDA. But it's fascinating. It would just be fascinating for us to understand, what processes you have in place and what that looks like.
Yeah,
Lee,
absolutely.
I'll let you take it away.
Yeah, we'll ask the audience on this one, I think. So how do you currently assess client vulnerability in your mortgage advice? So in the chat function, A, B, C, D, or E. Is it a structured questionnaire at a fact find stage? Is it conversational? Is it relying on client disclosure? If you don't have a formal vulnerability assessment process, that's absolutely fine. Or E, not sure what is required. I suppose, whilst people just pop in, and look, if there's anything else that we've missed, do again let us know. But how important is advisor training compared with having the right systems and processes in place, would you say?
Massively. I suppose that takes us back to the note taker tool. I suppose having a true insight into what's happening during these meetings. I can imagine for decades now, advisors going into meetings and none of these meetings are recorded. They couldn't have been. There was no technology for that. So the millions of meetings that have happened over the years with advisors and clients, and now you have a facility, particularly when you're talking about training, you have a facility like an AI note-taking tool that can literally record every conversation. And we're framing this like the AI note taker is incredibly suitable for the advisor to provide efficient advice. It's also suitable for the financial planning firm on top as well, or the mortgage and protection firm on top. Because if I'm a firm manager and I manage 10 different advisors, when it comes to training, I've got full visibility on every single conversation. And I can
Mm,
use AI to provide me with beautiful insights in terms of what working, what isn't. We've got these new regulations, who's following them, who isn't. So I think training is core in this for sure. And I think training will become a lot easier with AI note taking, so I
mm,
can spot where the problems are. Whereas, but beforehand, I would imagine you're pretty blind. You can get regulations, you can receive regulations from regulator, you can put processes in place. How can I document and prove people are following those processes? That's almost impossible if I'm not in every
mm.
single meeting, but you can be now. And that's not kind of big brother, we need to worry about this. This should relate, or this should mean better results for everyone, a more
Yeah.
compliant industry, and better results for the client, more importantly.
Yeah, what I want to add to that as well with the AI note taker piece, right? Because everybody's using them now, right? They're integrated into Teams, into Zoom. Some of the non financial planning specific AI note takers are not going to be as advanced or as aligned to the financial planning world as others, right? I could see some Fireflies, Otter, Fathom. These are generic AI note takers. When you actually look at a financial planning specific AI note taker, and there's some amazing firms out there, vulnerability is almost built into these, right? So if you're having a meeting with a client and they ask you to repeat yourself a couple of times, it will flag up that maybe that client is
Yes,
hard of hearing, right? So, but your generic AI note takers, unless trained to do so, they're not going to flag up this kind of vulnerability, right? So
absolutely.
we always make sure that when you're using AI and note takers within financial planning, that you are really speaking to the household names that are really driving the innovation, the industry forward with their note takers, because they are making your life a hell of a lot easier. They're not just transcribing what's said, right? So really do
Absolutely.
think about that.
I'd say as well, I know we're incredibly biased on this, but because we have our own note taking tool, but it is absolutely integral. If you pick a note taker tool, just
Mm,
do your due diligence and research to make sure this is a long-term commitment. It might be a monthly direct debit, but it's not something you can move away from that quickly. It's
no,
pretty obvious, right? If I use a note taker tool for a year and I've got 1,000 meetings recorded, it's very, very difficult to move those meetings to another note taker tool. That's
yeah,
not technology that really exists yet. So
no,
although the contract may be easy to get out of and it's quite cheap and it's easy to move, just
mm,
do your due diligence. Put them, yeah, beauty parade, put them all side one another, make sure, because you pick a note taker tool, it is a long-term commitment for
yeah.
sure.
It's what you do with the notes, right? It's the output that it gives to you. Let's have a look. We've had a question come in. So you may do a mortgage or a remortgage with no meeting. I'm guessing you just make sure the emails are kept within your CRM.
Yes. Yeah, very much
Yeah,
so. That has to be documented.
yeah, absolutely, absolutely. Thank you for the question. Um, good response on this. B seems to be, if I look at it,
Interesting.
from snapshot, seems to be the conversational assessment, which is fine. Um, I suppose it asks the questions, do you think vulnerability is something that can be identified through a process, or does it come from the experience and good conversations?
Yeah, I don't know. To be honest, I don't even know if there's a right or wrong answer.
Yeah,
I would say B would probably be the one I gravitate to as well. I mean, ultimately,
yeah,
it has to be a free-flowing discussion. But I would assume as well that if you're trying to spot a vulnerability in a client, is that necessarily going to be unearthed in just a half an hour call with them? Probably not, which is why you
mm,
need a process that's recording every single call. So you can therefore maybe again, whether it's your human brain or an AI brain,
mm,
can start spotting patterns. I mean, your example there of asking for something twice, you may just dismiss that initially, rightly so, because we all ask those sorts of questions. But if
mm.
that's a pattern that reoccurs, is your human brain going to pick that up in 3 or 4 meetings, or is that something a note taker could do? There's probably a bit of both, but
Yeah,
yeah.
someone's also put C, which is quite interesting, right? Relying on client disclosure. And I suppose you're prompting that from them, right? You're not willingly waiting for them to come to the table and disclose. I suppose that's built into your questionnaire, your fact find, your disclosures.
Yeah, yeah, bit of everything. I mean, ultimately, I think C would probably be a little bit more reactive. Um, but again, maybe Maybe it's a combination of A, B, and C. I
Yeah,
think that, again, this is a problem with regulations. They never really say how this is. They kind of say this is what you need to do, but they're quite light on detail in terms of explicitly how you do it. So it's, as I said, it's usually quite messy for these first couple of years with regulations, as everyone just the market kind of reacts to that and just gradually finds a bit of a platform, and then there's generally kind of a consensus forming. But certainly from our perspective, kind of using AI note taker tools as part of a free flowing conversation, touching upon that during a conversational piece, and just ultimately being a little bit more aware of
mm,
the documents you're sending clients, the wording of those documents. And I think
yeah,
that's good anyway, just to ensure that you're not using too much jargon. I mean, a lot of these regulations are quite a lot of common sense. Even if I am talking to someone that does know a lot about the industry, it still doesn't hurt to make sure the language I'm using is as easy to understand as possible.
yeah. And what Julie rightly says in the chat as well, they send every client the opportunity to disclose, really,
Yeah,
which
that's
is
good.
good. It's a good
Prompting.
process to have.
Yeah, 100%. Yep.
Yeah, back over
Awesome.
to you, mate.
Cool. Kind of leads us on to the AI note-taking world then. So, um, as I keep kind of referencing, we've got these new regulations in place. Again, how is that making the industry change? What kind of new technologies have we got in place to kind of help with those conversations? Um, we did we run a survey every year with advisors, and we try and kind of get insights from them, try and kind of spot trends, spot kind of
Mm,
different consensuses. A couple of interesting snippets here from our survey. So based on using kind of integrated technology and based on using note taker tools, we've those that are using that type of technology found that 50% they were having 50% less meeting admin, which again isn't surprising. Any one of you that have used a meeting note taker tool knows how much less admin there is for a meeting. So we're finding that there's a massive value add in using meeting agents that are integrated. And then equally, it's interesting to know that 32% of the average client bank is now under 40. And again, clearly those expectations are going to change. I just think of my own personal circumstance when I look at my family and my mum and dad and that generation compared to me and my children's generation. We're all going to expect a slightly different experience when we go and see an advisor. And I would
mm,
imagine under 40s are going to expect an experience that's very kind of tech laden, tech heavy,
yeah.
tech efficient. I think we're hopefully,
Short form as
thankfully,
well, right? We're not going to be
yeah,
able
yeah,
to short
definitely.
video. You think about your annual reviews, soon that'll be in, 15 3-minute videos.
Yeah, exactly. Yeah, rather than 50 pages of a
Yeah.
suitability report. Yeah, absolutely. Yeah, and that's only for everyone's benefit, the client and the advisor.
Yeah.
Um, but so note taking tools. There's clearly a room here for a note taking tool. So those of you that haven't seen them before, I've got this loaded up. It's been in the background for 37 minutes. I might have to log in here. Let's just see if it's still awake. It looks like it is. So this is our note taking tool. Again, note taking tools are fairly generic. They all do the same
Mm,
thing. So how a note taking tool works for those of you that aren't using, as I said, we still go into a lot of meetings where no note takers join the meeting apart from our own. So I can only assume there's that penetration hasn't really happened with a lot of advice businesses. But ultimately, when when you're using a note taker tool, every single meeting you're going into, um, digital or face to face, it doesn't matter. That note taker is in the meeting with you, and it's transcribing the meeting. It's taking all the notes for you. It's recording the meeting, and then it's able to create actionable insights off the back of it. So I can, after I've just met with a client, I can come back into my note taker tool within minutes. I can click on Sherlock Holmes at the bottom down here. These are all the meetings I've had with Sherlock. It was the first meeting I'd ever had with him, so I can simply review this one. And it straight away shows me the transcript of the call, what took place. Is actually a fake meeting between Sarah and Sherlock, Sarah, the advisor, Sherlock. So there's everything they spoke about. It could be a 4 hour meeting, could be a 10-minute meeting, doesn't matter. But it's taken the transcription. It's got a recording as well. So with all these note taker tools, if I do this all the time, when I need to phone someone back, I want to try and find that one connector. And maybe they spoke about their holidays. They were off on holidays. They wanted me to call them back, but where did they go on holiday? It was quite nice to start that meeting by saying, "Oh, how was your holiday in Tenerife?" Example. Or I know your daughter got married. So all those little soft facts, it's picking up for you. So you can go straight into your note taker and simply ask that question. Sherlock said he was going on holiday. Was he going on holiday? It'll just simply tell you. So it's incredibly useful in that respect. But it also takes the transcript, takes the recording, takes any additional notes you've made as well, perhaps during the call or afterwards, and it creates enhanced notes for you. So say, well, based on everything we know, We're going to aggregate all of that insight and give you actionable insights off the back of it. So we'll give you the key points discussed that you had a. We know that Sherlock's got a Halifax mortgage of 300K and the interest rate of 3.5%. It expires in 3 years. We know he's got life insurance policy. He thought it was with Aviva, 100 grand. He lives here, so he's given us his address, so I don't have to note that down anywhere. I'll show you in a minute how this integrates to the other parts of our ecosystem, the action items and the next steps as well. So, what's now expected of us, Sherlock and the advisor. But coming back to your point about kind of vulnerability assessment, again, 100% using AI note takers that are built for your industry. There's a clear benefit to that because something like this, I can very quickly now spin that up into a vulnerability assessment and it will now regenerate. So based on a different set of criteria, this criteria, the meeting review was just literally take everything you know about this client and give me key points, discuss action items and next steps. Now the request is, no, take everything in the meeting. You know the FCA guidelines and guardrails around vulnerability assessment.
Exactly.
Give me a vulnerability assessment on this client, or that meeting at least. And it does exactly that. It gives me the client background. It gives me the health-related vulnerabilities that it was able to unearth, if it was able to unearth any. Again, this is all core FCA guidelines, resilience-related vulnerabilities, communication accessibility. And I've asked it to give me a scale as well. No, give me a scale from your opinion, from all of that transcript, from a 1 to 5, 1 being absolutely no vulnerability to 5 being super vulnerable. Can you spot any signs of vulnerability? And it's given me a conclusion. And that's within 5 seconds. My brain hasn't had to do that. That's just using the words that person, that client has spoken. So it's going to save me an awful amount of time. It's far more compliant, far more efficient, and clearly will lead to better results because if it has spotted any vulnerability, I can now pivot my advice process for that client.
David, I just want to randomly ask the audience this, right? Of those that are using note takers, just again in the chat, let us know if you're using a note taker. Put an A in the chat if it's FS specific, or a B if it's more of a generic note taker where you're not getting these outputs automatically. You maybe have to be a prompt engineer in between submitting applications, right? So just let us know. If you're not using a note taker, again, just let us know you're not using one. But A if it is industry specific, or B if it's more of a generic, your Fathoms, your Otter AIs, or your Fireflies. It'd be good to. So yeah, Rachel's using something a little bit more generic. So Rachel is a prompt engineer, just like most of us as well, where we're running the transcripts through probably AI, ChatGPT, Claude, whatever you're using, and you're trying to create these prompts and trying to identify opportunities, vulnerability, and everything else. A couple of people are not even using one. I think. I mean, we can see the benefits, David, right? Because we use them day in, day out. But in this instance here, to use the FE note taker, to have those, because that's what they are essentially, David, right? Or am I wrong? They're basically inbuilt prompts that are looking for certain information within the notes to draw this specific information out.
Very much so.
Within the parameters of the FCA guidelines, right? So it's
exactly that.
It's super tight. It is super, super, super tight. Where your more generic, your Bs, they're not working to any parameters. They're not working with any walls, any guidance, any parameters whatsoever. And it's almost you put in a sentence and it will fill in the blanks with an assumption output. Really, you can ask the same question to AI twice and you'll get 2 different answers.
It's also how it's integrated to the rest of your stack as well, because we find often if you're using the ones you've mentioned there, your kind of Fathoms and your Otters, they are just islanded systems that might integrate to other generic systems like Microsoft 365, etc., but they won't integrate with your financial advisor software. So what this does, this is not islanded, this is within our tech stack. So you can see on the right-hand side, all of the things that it's told you that could sit in cash. We're talking about cash flow now and taking this data. He's told us his date of birth. He's maybe told us his postcode. He's told us his insurance policy. He's told us his mortgage rates. He's told us all this information that I'm going to now need to create a cash flow for him. He's also told me about his pensions and his ISAs, everything in just that one call. So I haven't had to document anything. What the note taker will do is then draw out all the bits of information that sit in cash flow or cash calc and list them here. Look, he's got an emerald necklace worth 500 grand. He's got an asset a violin. He's got a property, that's his address. It was worth 1.8 million. There's his Vanguard ISA, etc. So it's taking
It's
all of
pulling it all in,
the
isn't it?
goals, objectives, liabilities with mortgage, and all I do then is just approve each one, and it pushes it into cash calc. So then I can start creating the cash flows
Fine.
off the back of it.
I was going to ask you that, mate. So we've had a question come in. Someone saying, look, when they model these scenarios with a client, how does that feed the client file really and the audit trail? So the vulnerability and affordability conversations are evidenced, for Consumer Duty without, I think the most important thing here, mate, is without extra admin, right? We're too busy
100%.
for extra admin. So how does it all feed into each other?
Yeah, it's a really good question. So at the moment, these systems are linked to each other, like tethered to one another. So I'm doing all of my note taking in here. It pushes the data into cash flow. I can then create a cash flow. But admittedly, the reports you're creating are kind of housed within each one of these applications. So at the moment, all of my note taking and all of the insights I'm getting here, I can click these buttons here and send that out to the client as well and put that in my own file. But 100%, this is what we're doing now for the rest of the year. This is priority number one. And this is, to be honest, I've been at this company now for nearly 20 years, and this has always been the ambition. How do we create a one-stop shop solution, one ecosystem that does everything? And at the very top of that ecosystem is exactly that, reportable insights that drag everything up from the bottom to create one report. Well, we can't do that bit at the top unless we've got the foundation right. So this is just about building that foundation. And then hopefully we're hoping 3 or 4 months, we'll essentially have suitability reports and yearly reports that sit above all of this, that on one click will take all of the data you're getting from cash flow in cash calc. It will take all the data you're getting in your note taker tool, and it will pull it up into a suitability report or an annual review. But yes, in answer to your question, right now, it's essentially housed in this application. So if you ever wanted to run kind of actionable insights, you're having to go to the actual client in here. But that's very much step number 2 for us, is to be able to pull that into one report.
Fine. Couple of questions coming from both angles here. So we've got one here saying they use a note taker tool within the likes of Teams and Zoom for obviously virtual meetings, but we are not currently using one for face-to-face meetings. So does the Nexus AI note taker have the ability to record non-virtual meetings?
Imminently, yeah. So at the moment, no, it's just digital. But we were supposed to have released this a couple of weeks ago, but we've had some issues with Android and getting it on the App Store. Not insurmountable issues, just things that have delayed us for a bit. So the hope is that it should be with us by the end of this month, and it will essentially be an app. So if you're on a Teams or a Zoom call, it will join those calls. If not, you've got the app on your phone. You can just download the app, put it on the coffee table in the middle, open the meeting, and it will just understand the different voices. And then so you can do the face to face as well.
Yeah, that's awesome.
That's critical.
One more question. I suppose this is around integration, API feeds. Can this feed into my IO CRM?
Not yet. So, kind of. So a lot of the information you're picking up here, like names, addresses, assets, that can be pushed into cash calc, as we've just shown you, and cash calc has a direct point-to-point integration with IO. So simply do it via cash calc, push the data into cash calc, push the data then into IO. It doesn't have a direct integration in terms of all the reports you're creating, like vulnerability assessments and all of the actionable insights. We are looking at that, though, a point-to-point integration between the note taker and IO. So that is being worked on. But ultimately, before that, you can just simply use cash calc as a conduit.
And I suppose it'd be quite cool to start pulling in providers like 27 Tech, the mortgage world. So they've got access to this tech, and it can also integrate with the systems that they use, because they're not going to be using IO and some of the other financial planning related tools either, are they? So is that in the pipeline, do you think? Is that on the roadmap?
Funny enough, I spoke to 27 Tech a couple of weeks ago. We already integrate with them. Well, one of our other applications integrates with 27 Tech. So I have made them aware that this is available. As with any tech company, there's always a priority list of things they have to develop and only a certain amount of resource. So it's going to be one of those. I think I've got to keep knocking on their door. But I think we found with a lot of this, and we're the same, is like, priorities change based on who's pestering us. So if you get a lot of people suddenly saying, look, that thing on priority list number 20, we all need that. Suddenly it's priority, exactly that. So at the moment, it's just us knocking on 27 Tech's door. But if a lot of people were, clearly that will get built sooner. But we'll continue knocking on their door. And I think, but it's also, I suppose, a bit of incumbent on us to make sure these solutions are easy to integrate with. So I know we are looking at kind of open APIs to make the heavy lifting a lot less. so you can have a point-to-point integration very quickly.
Someone's just asked us, mate. They're actually switching to 27 Tech at the moment. What is it you do with them right now? What are
So
you
we
access
have
to?
we have our fund and portfolio research tool called Analytics. So if you've got any client portfolios on 27 Tech, like you might have a pension of 10 funds, you can click a button and that will automatically get imported into Analytics and create the portfolio on the fly for you. So we know them well. We've done a lot of work with them in the past. That was quite a heavy integration, that one, because it's quite difficult to integrate into Analytics. Ironically, to integrate with these, Analytics is quite an old system, so it's built on an old bedrock of technology. So it takes a lot of heavy lifting to integrate with. But Cash Calc's a lot newer. It's got an open API, and this is only a couple of months old. So building integrations into these newer bits of technology is a lot simpler.
It's going to come thick and fast, mate, right?
Hopefully, yeah. I mean, to be honest, ideally, I could see a world where we have an open API, they'll have an open API, and an advisor can go in there and just build the connector themselves.
Yeah.
They would just go in there and just connect the dots
Plug in.
maybe an intermediary. Yeah.
Yeah. Just going to call out 10 minutes before we hit the hour mark. I just want to make sure that we're getting through everything we want to get through, because I want to see really the cash flow for mortgage and protection advisors. No doubt the audience want to see that bit as well.
Absolutely.
So yeah, look, we've done tons of polls, but does your firm currently use cash flow planning as part of the mortgage and protection process currently? A for yes, B for no. And whilst that's coming through, A's and B's, let's should we jump in? Have you got enough time, Dave? I'm just
absolutely. Let's rattle through it.
Good.
Absolutely.
Good.
So essentially, as I said earlier, cash flow plans always belong to financial advice. We believe it belongs to just as much as every mortgage and protection conversation. So what have we been doing over the last year to adjust our tool to be more aligned with the M&P space? So a couple of things. Again, this has been sitting in the background, so hopefully I don't have to log into this again. But so going back to that first cash flow image I showed you, kind of the storytelling. So this is a great example of how cash cow can already, or cash flow can already be used in like a mortgage and protection conversation. This is a slightly younger couple. What are they called? Joseph and Natalie, married couple, 44, 42, got a fairly sizable investment pot. They plan to work up until they're 60 odd. Their pot size is going to be worth about 900,000, and then they eat away at those assets. And then they've got a nice, even if they were to live to the ripe old age of 100, they've got a good old pot to hand down to loved ones and children in inheritance. That looks great. But again, what I can do with cash calc or cash flow is kill one of them off and say, well, actually, this is looking great for you. But what does life look like if one of you had suddenly had an early death? Well, suddenly it doesn't look so rosy. If Joseph died early in his 50s, then suddenly, and there's no protection in place, suddenly, yes, all of those assets go across to you, Natalie. But then obviously the expenses are so high because you've still got your mortgage to pay. They're not going to reduce that. You've still got 2 kids to feed, et cetera, et cetera. So you're going to eat away at those assets. And actually, you're now going to run out of assets by the time you're 96, 97. And then if you were to live to the ripe old age of 100, not even assuming old care homes or any other bumps in the road you may face, you've got a black hole of 421,000 to now consider, which is probably presumably selling the house, equity release, and not handing anything to loved ones. So again, it's that storytelling. This is what it looks like now. This is the problem I've unearthed by looking out into the future and foreseeing potential harm. And this is what life looks like if I have an insurance policy in place that can suddenly pay out on that death of 300,000. Obviously, we'll keep that insurance payout probably invested somewhere, growing at 3, 4, 5%. I can obviously change the logic if I like. And this is all net of inflation. So this inflation's taken into account. Yes, you will run out of those assets by the time you're 76, but that's absolutely fine because then you'll have a pot worth 574,000 that you will then run until your old age. And if you were to live to the age of 100, you've got 318,000 left in that pot. And the great thing, cash flow is generally used in client meetings, so it's quite dynamic. So if the client's looking at this and saying, "Yeah, this is brilliant," but what happens if my husband dies 3 or 4 years younger than this? Then you can come back to the assumptions tab. Everything is tethered to this event. So I can just flip that to say 52 and it dynamically changes everything in the background. So when I come to my cash flow model, it does exactly that. Come on, there we go. So it changes it. Does that change it? No, it hasn't. Why hasn't that changed it? Let's do that one more time. Don't think it's saved. Let's do 52. Think I may have been a bit impatient. There we go. It has changed now. That should work. There we go. So we can say, okay, well, even if you were to few years younger than that, early 50s, and we still don't really need to. Maybe we might want to think about increasing the protection commitment, but even so, we're still you would still have to live until you're 97, which age expectancy is late 80s. So you'd still have to live well beyond your life expectancy to ever have to think about starting to sell down your house. So those are the sorts of features available now. The other couple of ones that we've done, appreciate time. So just a couple of other ones. We've also got the ability now to add a mortgage into cash calcs under mortgage and protection over here. You can add a mortgage and protection, and you can do this not just in isolation, but with other pots as well. And you can show the liability of that mortgage going down every year, and you can show the capital of your house going up every year with various different assumptions. But then you can play that side by side. Okay, what does this look like with an overpayment? You can add an overpayment into the settings very quickly and say, well, if you were to make an overpayment of £300 every year, that would reduce that by 3 or 4 years.
Yeah, that's awesome.
And show the kind of the science and logic behind it. Just one final one. You've also got under the info tab up here, all of the data you're collecting on that client, Joseph, whether you're bringing it in from a third party CRM, whether you're bringing it across from that note taker tool, whether you're bringing it across from our portal. We've got a client portal where the client can fill in a fact find and all that data gets put in here. I can then just click on update a calculator. I can select where that data goes. Do I want to put all of that data into a cash flow model, or do I want to use one of these new two features we've built, a mortgage overpayment and a rate rise remortgage calculator? So I can put this into a mortgage overpayment calculator. I can just simply click on, call it something. I'll just call it anything, and click on export. And it will take the mortgage that we already have. Again, this could just be from the conversation from the note taker. We now know the mortgage that client has. We can take all of that information. All of the detail on the left-hand side is pre-populated, what the original loan is, what the initial fixed rate is, the fixed rate that goes up in 5 years to 5.5, et cetera, et cetera. All of that's been pre-populated for me. So I can save and calculate and show them a mortgage calculation. Your mortgage is being about 1347 at the moment. It's going to go up to 1652. And at the moment, you're going to pay off your mortgage here. What does life look like? We've spoken about cash flow. We can see that you can make £500 worth of overpayments, and it will do just that. It will show me how much interest you could save, how many years you could save, and a nice little visual graphic there. And in terms of documenting, coming back to Consumer Duty, you can create report, have that on file, and make sure the client understands the effect of that overpayment. The other one was a rate rise calculator. I won't show that now because I appreciate we're almost at time, but the rate rise calculator, as the name suggests, again, provides a nice little visualization to show the client, okay, this is what life looks like now with all your incomes and expenses, and this is you paying a rate of 3.5%. What does it look like if the rate suddenly goes up to 7.5% or 8% or 7%, etc.? And it will then show you a nice little visualization of how close you are to be able to not afford that, because it knows your kind of limit, how much income's coming in, and how close to the wire you are if those interest rates were to spike. So we have got more calculators coming. That's another thing on the priority list. They should be released in the next month. We've got another 7 calculators on the way. They're all available under the little tools tab on the right hand side. There's quite a few actually. You've got stamp duty calculator, mortgage and equity release calculator, rental yield calculator. But you've also got the two new ones. But there are another. I think there's about 6 to be added, that mainly around protection.
Nice.
So yeah, adjusting. As I said, in summary, Cashflow was already, a good solution for the mortgage and protection space. We already had mortgage and protection advisors using it for the stuff that I just showed there, but we do admit that there probably are some things around the edges that we can adjust to make it a little bit more user friendly for the mortgage and protection advisor, that we're adding in there, and we'll continue to do.
I feel like sometimes protection is seen as kind of like an immediate reassurance. But I think when you throw cash flow modeling into it, it's kind of like you get that immediate reassurance, but then you also get that long term, what it actually does for you in the event of this happens, but this happens over time. And instead of it just giving you, we'll get some insurance in place for that, and if anything was to happen, you get paid out. What great, but what does that mean to me long term? Which is really, really cool. What about for the younger clientele, right? Let's bring some 20-year-olds, 30-year-olds into this that are doing their first mortgage as such, that might not have the big pension pots, and something a little bit different. Maybe where, someone's put here, it seems to be quite loaded towards the older clients. They do approximately 2,000 mortgages a year. Most of them are in their 30s, little savings, pension seems to be workplace. Um, and the age of death is always around the 83-year-old. Why are we using 100, for example?
Yeah, very much so. You can dictate the age of forecast. It's just the regulator wants to see the forecast go beyond life expectancy. Because
Okay.
if you were cash flowing to life expectancy 86, that's great. And you can say, well, you still have money on 86, but what about if a lot of people are going to live after 86? So
Yeah.
you can show what life looks like if you were to die at 86, and that's the general assumption. But yeah, generally the regulator wants to see a lot further than that. So the general consensus is cash flows go to 100.
Yeah. Don't want to
That's what that,
forecast
but
to the last day. You want to forecast for beyond the
yeah,
last
very
day,
much
right?
so. Very much
Yeah.
so. Well, particularly with AI and the fact that we could potentially live forever. These forecasters might have to go to
Yeah.
500. Um,
Limitless.
yeah,
Um,
exactly. I would know. I just to push back a bit. I mean, the examples I've used there, admittedly, are on I've only two or three examples I've used there are clients in their 40s and 60s. But cash flow is agnostic. You can use cash flow for anyone.
yeah.
If your client is 20, the cash flow would start at 20 and finish at 100, and it'd be a lot longer. And you can show, look, Mr. or Mrs. Client, if you're 25, you're in a really good position here. If you put money away now, and again that compounds over time, or in terms of
Yeah.
a mortgage and protection, those mortgage and protection calculations are just simply based on your income today versus your expense. It doesn't matter if
Mm,
you're 20 or 30 or 80.
yeah.
It's the same sort of logic, and it's the same sort of illustrations and reporting you're going to be creating off the back of it. Age is irrelevant.
Well, this is it, right? So you haven't got to have a client sat in front of you that's got the big pension pots, that's got good income, income yield from buy to lets or whatever it may be. You could run this on somebody just doing a mortgage application with you, and you can bring in the overpayments. You could talk to them about the rate rises. You could talk to them about in any eventuality, if this happens, this pays out, this comes into place. It's people are, I think people are a lot more visual these days than looking
Yeah.
at just a whopping stack of paper saying this is your mortgage, this is how many years it's over, this is your repayments. And I think we're at a point now where cash is a little bit more liquid and they can overpay. But I don't think many people really understand the overpayment journey. I think in my 20s, when I bought my first property, did I want to overpay? No. Could I see any benefits of overpaying? Absolutely not. Do I wish I'd done it when I was in my 20s? Absolutely.
Definitely.
Because I suppose that visual outlook on things. But if you made that mandatory, if you just brought that into your advice process and said, look, this is what we're doing, this is what we can be doing, I think it just
Absolutely.
creates a different outcome for people.
100%. A picture paints 1,000 words.
Yeah.
But yeah,
Oh,
very much so. Very powerful.
absolutely. Conscious, we are 2 minutes past. I want to take this time to thank everybody for attending today's session. It was recorded, so we'll upload the video. We'll reshare it with you guys as well. Please do give us some feedback on the feedback form. As soon as you hit leave webinar, a feedback form will pop up. It takes literally minutes. Give us some feedback on Dave, myself, the club, FE Fund Info. Just let us know your thoughts on today's session. If you do have to shoot off, please do. If not, we'll be hanging around as we answer any further questions. So feel free to come or go. I use FinCalc on my wealth clients. I will look at my mortgage clients and see what I think seems to be pushing something. Which what's it? As it seems to be pushing something on young clients I'm not sure about. So really, is there an age demographic that we've got to look at here?
With cash flow.
Yeah.
As I said, I think cash flow is age agnostic. I mean, ultimately, whoever the client is, whatever their situation, even if they were someone that's gone and FOMO'd into crypto, and
Yeah.
they want you to plot out what their 10 grand, 20 grand crypto pot looks like if it continues to grow
Yeah.
at 70%. I'm not using that as the example because these are examples
You
we've come across before.
yeah.
But you can do all of it. It really doesn't matter. Whoever the client is, put in their data, and you can tell a story to them about this is what life looks like at the
Mm,
moment, and this is what life looks like if we made slight adjustments today.
yeah.
Well, essentially, whatever. I mean, it always boils down to what their goals and objectives are. I mean, this is what the again the regulators I think trying to push as well. The idea that the outcome should be based on the true goal and objective of the client. If their objective is A, B, and C, what are we doing to implement
Mm,
to achieve that goal? And that's again the whole purpose of cash flow planning. It's kind of a goal based financial planning tool. to be able to show, look, if we implement this now, your goal is A, we can hit A by doing X, Y, and Z.
I mean, look, yeah, exactly. I know that, if you are a mortgage advisor, you could bring something like this into your business to differentiate yourself from other advisors.
Definitely.
Because I think with the mortgage world, people are fixated on broker fees, prop fees. A lot of it is you could lose business for a broker fee, right? Oh, mate, your boy down the road charges 200 quid, you're 400 quid. Essentially, you got access to all of the same lenders. I'll save myself 200 quid and go and mate your boy down the road. But I think if you bring stuff like cash flow modeling into it, and I'm a massive advocate for client service, client journey, and I'm very much about value for money. And I think this adds a whole new level to your service to your clients, because you are providing a service that many others probably aren't. Let's be honest. As you know, there's not enough mortgage brokers out there implementing cash flow modeling. So get ahead of the curve, guys. Use it.
And also 100%. I mean, I've always said that the regulations have been quite explicit. You have to be a regulated financial advisor to be offering an investment solution. You don't have to be a regulated financial advisor to use cash flow. Never have done.
No.
Cash flow is just simply taking someone's financial position and projecting it out into the future. And there's so many different ways in which you can do that as a part of a mortgage protection process. 100%.
Yeah. I think you build much more rapport. I think you build better relationships with your clients. I think if you're sitting down and you're presenting and you're going through and you're talking about circumstances and eventualities and what cans and ifs and buts and everything in between, is the other advisor doing that in a moment? I don't think they are. I don't think they are. So I think this is a great time and a great opportunity to start bringing cash flow modeling into the mortgage and protections market and workplace. Definitely. With the Nexus AI note taker, can you upload a recording into it? Okay, interesting. Can you upload voice notes?
You could, under the note section of the note taker tool, you can upload anything in there. So yes, it depends on the format though, in fairness. So you couldn't kind of upload like an MP4 file or a Word document. It would have to be essentially text. But it's a very good question. That's kind of to my point earlier about the fact that these note taker tools are quite tricky at the moment at moving data from one to the other. So if I've decided to use a different note taker tool, how do I get all of that data from one to the other? That will get better in time. It's just that, again, the industry is so young. These note takers have only just been released for the most part. So those pain points that people have would, as with any free market, those solutions would be built based on whatever pain the client has. So
there's very specific AI for that as well. So I think I even looked at that, Rachel, a while ago using ChatGPT. I think I had an audio file that I wanted to transcribe, and I think even that said no. I think I had to look for a very specific tool to extract that MP4 into a written transcript, really. So yeah, that's not typically your norm, is it really?
But it will come for sure.
It will come, yeah, absolutely. But the main thing is, soon you won't have to, because you'll have a smartphone app where you just pop it in front of you and you're done.
Very much so. Yeah.
Job done. Any other questions? Because I can appreciate we're now 7 minutes past the hour. People are hanging around. Maybe they just like us chatting, Dave. What do you want to talk about next?
Not the football.
Not the football. We're not talking. We spoke about this early on. We're not talking about the football. Any other questions? Just want to thank everybody again for joining us today. It's been a really good session, mate. I like it.
Thank you very much for having us. It's been great.
Anytime. With that being said, as it's quieting down on the old Q&A front, what we'll do, we'll bring things. No, I've got a question. No, I've answered that one. We'll bring things to an end. Thank you all for joining us. Don't forget, tomorrow is not the weekend. Tomorrow is Friday, so go back to work tomorrow. Then have a lovely weekend. Thank you all for joining us. Dave from FE Fund Info. Thank you very much for your time today.
Pleasure. Thank you very much for having us.
Thanks all. See you soon.